Welcome to Four Corners Finance, your go-to source in the latest stock market news and trends. Today, we're going to talk about a stock of the day. This stock is a household name in the grocery industry in many households across America. The stock we're going to talk about is Kroger, ticker symbol KR. We're going to dive into the numbers, some key takeaways from its earnings report, and why the stock surged more than 7% on the news. So what we're going to look at here is we've got an article from Reuters. You can find right on Yahoo Finance. It says right there in the headline, Kroger raising a lower end of its annual sales forecast. Cheap groceries luring customers. So the earnings report came out on the 12th, and the quarterly earnings report, and it's handily beaten expectations of the streets. The company raising lower end of its annual sales forecast, which is largely driven by its strategy in offering fresh groceries at competitive prices, which really helped attract budget-conscious consumers who've still been reeling from the effects of inflation, especially food inflation, has eaten into a lot of the American household budget. So Kroger has taken the strategy of offering groceries sort of at the discounted price. But take a closer look here at the report and why Kroger's earnings caught the attention of the market and risen so well. So scrolling through the article, very deeper within it, got this statement here. Kroger's posted adjusted profit of 93 cents a share, which beat the estimates of Wall Street of 91 cents a share. Not huge on the surface. It was really enough to boost a lot of investor confidence in the company. Identical sales, excluding fuel, were up 1.2%. You can see right here, which also surpassed expectations. Company's updated its annual forecast. Its sales are now projected to be between 0.75% and 1.75% growth. The lower limit was previously 0.25%. We can see right here. So that is a big reason that drove the stock higher on the news report, I think, especially the lower end, raising it a half a percentage point. The grocery industry tends to not be a high margin or high growth industry. But these numbers from the street are apparently good. Take a look deeper into what's driving the sales. The U.S. consumer still facing tight household budgets. You have more people choosing to eat at home rather than dining out. Kroger's is really set to capitalize on this trend and has been offering aggressive promotions and budget-friendly options to attract some of those deal-hungry shoppers. There's a quote in here from their CEO, Rodney McMullen, which we can find here. There we go. So McMullen says that consumers are really being strategic with their spending. Kroger sees a trend, consumers buying in bulk at the beginning of the month, becoming more cautious as the month goes on. And this is the kind of behavior Kroger's has been targeting. And it's really coming into fruition. Some interesting comments from the CEO just about however you want to take it about the economy in general, if you view Kroger as any sort of a bellwether. But you can see, according to Kroger's a large grocer, the consumer is still hungry for budget, for lower cost options. And really, you can see here Joseph Feldman, Telsey Advisory Group, regardless of where the consumer fits in the income spectrum, they're trying to save some money. It seems to be ubiquitous through the economy out there. In Kroger, the grocery industry is very competitive. Retail is very competitive. You've had giants of the likes of Walmart entering the space, Amazon with the higher end Whole Foods, and Costco, of course, doing very well. But really, Walmart, I see as more similar in terms of the demographic that they go after, the budget conscious consumer, um, the cost conscious crowd. But it looks like Kroger's is really holding its own. You see that in the stock price today. Move over to some graphs. This is just in Yahoo Finance. And you can see this is a chart comparison. We have Walmart. This line down here is Walmart. And if I go to year to date, you see a year to date, Walmart, really has outperformed Kroger. There's a big gap between the two. You see the divergence happen around May and June. Some news of Kroger trying to purchase Albertsons, but you see Walmart just steadily advancing, up 53% year to date. Kroger 22% year to date. It's not a bad return either. This doesn't factor in any dividends, but Walmart in the near term doing faring much better on the stock performance than Kroger. But if I zoom out a decent amount more time in the 5-year chart, you can see Kroger actually has slightly outperformed Walmart on the 5 years. This doesn't factor in dividend payments, but Kroger pays a fairly healthy dividend. Today is closer to 2.3 to 2.5%. 5-year historical average has been around 2%, according to Yahoo Finance. Let's see here, dividend. Here you go, 5-year average dividend yield, about 2% there. Interesting to note. And then Kroger really has been in the news a lot lately for its mega merger with Albertsons. They're trying to push through. The deal is being held up in court from the Federal Trade Commission. It's a $25 billion mega merger with Albertsons. And they said it's really under scrutiny from the FTC, fear that it could reduce competition, increase prices of groceries to consumers. Really, but despite the ongoing trial, Kroger has remained optimistic. CEO McMullen reaffirmed his confidence, stating he thought the merger would go through. And his claim is that he sees it'll actually reduce grocery prices, but this speculation both ways from either side here, left to be said by the market if it actually happens. But consider the retail space, the grocery space is fairly competitive. You got a number of players, like we said earlier. Walmart has entered the space, becoming a really large, one of the largest grocers in the country. People shopping in bulk at Costco. You can see Costco has done very well over the last several years. And then there's other spaces like Amazon, with the Whole Foods, the higher end. You have your Amazon, Whole Foods, and Sprouts Farmers Markets really done well over the last year. But nonetheless, this deal with Albertsons is something for Kroger shareholders to pay attention to. Investors really want to keep an eye on it, and could have a significant impact to Kroger's long-term growth. $25 billion deal. You go back to the article, go down here. This JP Morgan chimes in as well, talking about Kroger. Their statement about Kroger's business is that it's not crumbling under some of this competitive pressure that some had feared from entrance of Walmart. In fact, the company's steady performance in a tough economic climate, reassuring to investors. You can see by the performance over the last 5 years, the stock has done very well. Food and grocery store sector remains very competitive, but Kroger out there seems well positioned to maintain its edge. So with that said, on the stock performance, one more chart I want to get into. So this is Kroger as compared to two major indices, the S&P 500 here and the NASDAQ. You can see this is just Yahoo Finance. We have the S&P 500 and the NASDAQ. And you go down year to date, you can see Kroger's, with the recent pop on the earnings is outperformed slightly both indices. And then if I zoom out to the 5-year, this is what I thought was really interesting to note about Kroger. Um, you would think the grocery space is being fairly low growth. It's a low margin space, particularly when compared to the NASDAQ. It's performed comparably. This chart doesn't factor in dividends over the last 5 years, which Kroger pays a substantially larger dividend than a NASDAQ index. But the NASDAQ is known to be a tech industry or tech index with a lot of growth names in it. You often wouldn't think of a name like Kroger, more mature grocery retailer, as keeping pace in such a way that it has with the Nasdaq, and it's also outperformed the S&P 500 in the same time frame. And like I said, when you factor in the dividend payments, you can see steadily every quarter, and have also raised over this time a quarterly dividend of 16 cents a share, bumping up to over the 25 cents a share, now to 32 cents a share. So really substantial dividend growth in that time frame, along with the capital appreciation of the stock, has made it interesting note, and it's why we picked it up here on the stock of the day. So really looking ahead to what's next for Kroger is what we're interested in as investors. Where is it going from here? Not where has it been as much. But company really remains laser focused, offering value to consumers at a time when the consumer is pinched and there's a large deal of economic uncertainty. We've got an election coming up here in November, which there will be a new president with Biden stepping down. But with Kroger's revised growth forecast, possible merger on the horizon with Albertsons, it's definitely a stock to watch. Like I said, we really want to keep an eye on the progress of the Albertsons merger and what it would hold for the future of Kroger's. Look at some of the key stats as well in Yahoo Finance. You can see the valuation, the market cap right here. Its current market cap is near the highest it's been in the past year and a half. Price earnings to growth ratio is a interesting metrics that a lot of investors look at. Is the PE ratio is very close to the growth ratio. Forward and trailing price to earnings, something that investors often look at, seems to be less than the overall S&P 500 in the market. You look down to some of its other statistics here, and Yahoo Finance is really just a great site, accessible to anybody. Just go under statistics, under the ticker. You can see the grocery industry, retail is notoriously low margins, profit margin of less than 1.5%, operating margin just about 2%, return on assets about 6%. It's not screaming high, but for its industry could be fairly good metrics. But return on equity closer to 19%. You can see a large amount of revenue. Revenue growth quarterly is on the decline. Some of this could not be up to date, but some balance sheet metrics, some cash, fair amount of debt to equity. You can see the 52-week range in the S&P 500 range. So it's kind of getting closer to its 52-week highs of 58. Stocks around 55, 56. And just look at the dividends. Forward dividend about 2.5%, trailing 2.25%. 5-year average has been about 2%. But the payout ratio doesn't look unhealthy. 38.5% of the earnings paid out into dividends. It's a good metrics investors look at when analyzing dividend stocks, is how sustainable is the dividend. So just by that payout ratio alone, looks fairly stable. But you've got the Albertson merger, which be a lot of cash for the company, something to watch. So that's really all for today's stock of the day in Kroger. Hope you found the breakdown helpful. Make sure, please hit the like and subscribe for Four Corners Finance as we get into more insights and more stocks. We'd like to do this more often. But I'd like to hear what your thoughts are on Kroger, on the earnings report, upcoming mergers, competitive landscape with Walmart entering, Amazon as well, delivering groceries. So drop your comments below. Thanks for watching and see you next time.